Welcome to Scrolling with Ceazor. Today is August 25th, 2026. Okay, so a lot of news for you today, some chart talk, but as always, it's not financial advice. You make your own decisions, you deal with your own consequences. Number one, so taking a quick look at the charts, we've got ETH here. ETH is chilling around, everything's pretty much sideways. No movement, just less than it's 0.06% up, right? So as you can see, it's pretty flat right now. There's a little bit of movement today, but it's pretty much back down to where it started for the day. Sonic's down 1.5%. Hype is up 4%, but as you can see, it's still sideways. Stonks are finally starting to recover the dumping from last week. So I jumped in here. I've got my concentrated liquidity here on, it's DLMM liquidity on Ramses, as well as I opened this on base with it put into Beefy. Google's pretty much around my entry price. Tesla's looking on a trajectory up. ScanDisk, AMD. I opened this. So yeah, stocks are recovering a little bit, and crypto's kind of sideways or down, except Hyperliquid. YFI is continuing to look pretty decent. Okay, so that's it for the charts. Let's move over to some news. So here we have Cosmos. This is pretty crazy. So Cosmos, several of the Cosmos EVM chains were hacked because they didn't upgrade something. Now it doesn't clearly say here, but I don't have the best tweet, but basically an ongoing security incident has impacted users on the Cosmos EVM module. Cosmos Labs security and engineering teams have productively responding to the incident, blah, 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 blah. So yeah, several Cosmos chains were hacked today. And basically because they didn't upgrade something that they needed to upgrade, and kind of just being lazy or absent, or I don't know. Okay, so yeah, if you use Cosmos, you might want to check your bags. Okay, so Flex Meow opened a new market recently. There's 100K in there to be borrowed. It's a YCRV USD 2. So, excuse me. CRB USD put into Yearn can be looped now versus USDC on FlexMeow. So you can check it out. Yeah, consider it. Okay, so here's a Polygon. Polygon tweeted this out today, and I thought it was pretty interesting. So get to know Thomas Clements of Frax Finance. Frax settles FRX USD based FX pools on Polygon alongside Curve. DFB DeFi, turning a multi-bank currency conversion into the near instant on-chain settlement. So this is something that I've always wanted and I always thought was important, and what we were missing in DeFi was proper FX exchange. So currency exchange for sending cross-border payments or cross-border remittances and stuff like that. Sorry, I'm a little bit tired today. So remittances, like sending your grandma some cash and wherever she lives, this kind of stuff is something that we've always been missing in crypto, but crypto is very good for this, right? Because it's cheap, and you can send $50 to your grandma via crypto very easily. But the problem is, can she get it in her bank? Can she use it? And maybe you're sending US dollars and she needs, I don't know, pesos or something, then yeah, so I think this is something that's pretty important, and we don't really see it done very well in crypto, but maybe these guys have a good plan, and the facts that they're using FRX USD as the other side stablecoin, I'm happy with that, because it's not just like USDC, it's actual Frax OG stuff. Okay, moving on. So here we got a tweet by Nomadic and a tweet by Rectimides. These are two guys I follow, and they do these like reports quite often that I like. And you can go and you can read Nomadic's report here by going to his blog, and he discusses. Oh jeez! If we discuss the facts, so why are we back? the tokens he's holding and why. What if it were right or wrong during the bear, and a look at DeFi yields. So you can check that out. Rectimides does this tweet every once in a while that I really like, and it's like a long thing. What is he looking at? Just a list of stuff that he's looking at and thinking about and stuff like that. So it's kind of like scrolling with Ceazor, but just in text and very, very TLDR. So check those out. So Pendle had a incident. We'll call it an incident because I don't really consider it a hack. There was just pretty big liquidations. People had looped up REUSD USDC on the Pendle PT tokens on Pendle, and the Oracle got manipulated, and there's some massive liquidations. Now everybody's talking about this, so you'll be able to find lots of people talking about it. If you just like, this is just me searching Pendle, and you see Pendle's talking about it. JFab's talking about it here. McKenna's talking about it. Like, people, there's lots of people explaining what happened and how it happened. I'm not really exposed to this at all, so I'm not going to really dig deep on how it happened, but basically they manipulated the Oracle. And so you know your Oracle, okay? So if you are exposing yourself to something, especially with looping, like everyone just thinks, oh, it's USD, I can't get liquidated, but you can. So you have to be careful and not get liquidated. So here is Ethan DeFi. He's retweeting this Brian, and he says we need to stop using vaults. And he's like, I agree with that. This is the key point here. Curators earn performance fees, so they're incentivized to take higher risks for higher APRs. And he's like, in my opinion, the only proper way to align incentives between vault curators and depositors, curators should provide junior capital to the vaults to be the first to absorb losses. I don't think that's 100% necessary, but I do agree what he's saying. Like, the curators need to have skin in the game for sure. Because if they're just like, oh, you just give us your money, we'll manage it, but we won't manage our money, we'll just manage your money, and we'll take fees. So all they care about is attracting TVL then. But like, they're calling them vaults, and they are vaults. They're curated, managed markets vaults, but like, it's not the same as like something like a Yearn or Beefy vault, where they have a huge risk team that assesses risk and decides not whether to deploy capital to that or not, and then also has robotic keepers to pull liquidity out of places that in cases of things like look fishy. So I think the word vaults is a misnomer here. It's not Ethan's fault or Brian's fault. It's kind of the industry's fault. Like, these curated vaults on Morpho are vaults, but they're not the same as like a Yearn vault or a Beefy vault or something like that. Okay, so yeah, I agree with them, but at the same time, I kind of feel like, we've got to fix this vault term, or just educate people better on what are the risks they're taking, and who's in this. I like the idea that the curators should have skin in the game, and especially this junior tranche. Like, the junior tranche is probably something they're not going to ever do, but if they had all their treasury, which maybe some of them don't, but if they had all their treasury in their own vaults as junior capital basically means that, like, if there's a loss, then the junior capital loses the money first and the other people lose after. Then you would have a lot more lower risk, better risk assessments going on. So here's a talk. It's like 2.5 hours long, 2 hours and 48 minutes. There's a bunch of teams who are joined a contest for deploying on Sonic, and it's called 10x Founders Day. You can go through this, you can listen to it, you can maybe get some alpha on some different teams that might win this and deploy. They all pitching their own product to some like VCs, and the VCs then have to decide who they like. It's kind of like Shark Tank, if you think of it that way. I think it's a pretty good way to run this kind of stuff. It's unbiased. The VCs don't care about who you are. Token allocations, they're like, basically get us to spend our money. Crypto Yield Info has he hasn't been around for too much lately, but he's got a pretty cool tweet here. It says, borrowing dollars on chain against Bitcoin, Ethereum to move off chain to leverage through buying MicroStrategy Bitmine stock kind of feels like de-risking with greater upside. Now, I don't really agree with buying MicroStrategy Bitmine, but I get what he's saying here. Okay, so like I do this kind of stuff too. Like so you take ETH and you borrow USDC or whatever, and or you mint some stable coin versus it, maybe Bold. You sell all that into fiat, and then you use the fiat to buy stocks or ETFs or something that's not gonna like get liquidated or get hacked or anything like that. Then you end up with like you keep your Ethereum upside, but you reduce your deploying capital on chain risk. Because if you say that you borrow like a stable coin or you mint a stable coin and you put that to work on DeFi, then you can easily get it to repay your debt because it's there. However, that thing might get hacked and then you lose all your borrowed money, right? So what he's saying here is pretty interesting in that, like, if you take it off chain and you put it into TradFi, then you end up with something that's guaranteed, or like not like you will lose capital. You can lose money in capital gains, but you're not going to get hacked, right? Or you're not going to get like Oracle manipulated, right? This kind of stuff. So I get what he's saying here. I think it's interesting thought. I'm not saying MicroStrategy or Bitmine is the way forward, but I do think it's he's kind of using it to hedge the own risk, sort of, or double up the upside in that sense, because you've got BTC or ETH, Bitmine backing there. So moving on. So grow the pie. 2.4 million transactions on InkChain yesterday. Chart went vertical. I don't know what happened. That'd be cool to know. I don't really know. I don't really use Kraken's chain right now, but something definitely happened. Look at that like spike in usage. It could be washing, it could be anything, I don't know, but whole bunch of active addresses going up. It's pretty interesting. I wonder what happened. Okay, so Flex Meow is talking about the Pendle thing. I should have brought this over. I just didn't know it was about the Pendle thing. So the Pendle Oracle thing. So he's like a good reminder to always understand the oracles. So if you do go to Flex Meow, there's a place, an info question mark at the top where you can click it, and then you can kind of see what the oracle is on instead of just hoping the oracle is cool. You can understand it. You can then throw this into AI and be like, what are my risks? What could happen? Or you can go to like Telegram and ask questions and better understand the risk of the oracles before you loop up stuff, especially looping up stablecoins. Okay, the last one here we have is something happened recently. The liquidity pools, the liquidity stability pools have an APR of like 17%. And I went to Liquidity and I saw, so we've got APR of 15 on ETH, 17 on WST ETH, and our ETH about 6%. So there's probably some liquidations, or what doesn't make any sense, maybe some rate hikes. Let's see what the borrows are set at. I don't want to do that. So the borrow rates, average rates are pretty low. So there must have been some liquidations or something. I don't know why this APR has gotten so high. Otherwise, maybe some people have minted Bold and taken it elsewhere instead of putting it into the stability pool. Let's see, pool sizes. Yeah, so if you look here, we've got pool size of 4.4 million versus 12 million in debt, 11 versus 15, and 3 versus 4. So those the stability pools are not as full as they could be, so that's good. That means that the bolt is being taken outside of the stability pools and put to work in other places, which is quite nice. I like that. So that's it for today. I hope this has been interesting and useful, and thank you for listening, and goodbye.